Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. My very special guest today is Mr. Lior Gantz, and he is from wealthresearchgroup.com. And we have a number of topics that we're going to cover today. Everything from possible correction in the markets to cryptocurrencies to the political situation. And you're going to want to watch this whole video because we're going to give you so much information and discussion. So, Mr. Lior Gantz, welcome back to Looking at the Markets.
Thank you. Thanks for inviting me again.
Yeah, it's great to have you. So, first of all, I'd like to talk about a possible correction in the markets, in the U.S. markets. Do you think that there's a correction in the works right now?
Well, in a few days, we'll know much more. The GDP numbers will be very determining of what will happen next. In other words, everyone knows this is the late innings of this bull market cycle. There's no argument about that, and everybody knows that the stock market is trading at all-time highs in terms of their valuations. So the CAPE and the RSI, so anything from fundamental to technical analysis, it's all pointing that valuations are the highest in history. But valuations don't matter when you want to think about when a market tops. Valuations matter in the long run, and in the short term, what matters is a trend. So if there's a trend in place right now, then the markets will keep heading higher, and the trend is definitely in place for the markets to keep heading higher. So the top is definitely not here yet. It's probably going to come between now and 2 years from now. So certainly a lot of momentum still left for the stock market. Yeah, it's obviously been pushed up higher by the Federal Reserve's policies of zero interest rates, and it's definitely been pushed up by the fact that there are no other alternatives for yield. But that is changing, David, and that's the real point right now. And that's why I think a correction is definitely in order. And I think we might see the S&P 500 ending 2018, give or take, where it started 2018. So I think it will have a correction and then rally up there again, and we'll see another push up in 2019. Now, how do you see when the correction is coming? And we'll update this thoroughly in Wealth Research Group on the free newsletter. But the idea is this: you want to measure the spread between the 2-year, 5-year, and 10-year bonds and the S&P 500 dividend yield to see which is higher. If the 10-year bond ever reaches a point where it's higher in yield than the S&P 500, that's it. The market will top. For now, the 2-year and the 5-year are topping the S&P 500 dividend yield. So we are reaching a point where if there are negative news flows, just as Brexit did it in 2016, if there are negative news flows, there's going to be a sell-off. But different from what we've seen in the sell-offs from 2012 until today, you're not going to see people buying the dip. You're going to see major institutions, pension funds, and all the people that are chasing yields. You're going to see them say, hey, I'm not going to go back to the stock market. I'm just going to buy bonds from here on in this cycle. So we are going to see the treasury yield going higher as compared to the S&P 500, as long as the Fed funds rate, which the Fed committee controls thoroughly or completely, as long as they keep pushing rates up because they fear inflation is coming, we're going to see this pressure on stock prices. But because still the trend is so much in place, investor sentiment is so high right now, consumer sentiment is so high, and small business sentiment is very high, you will see the stock market keep on rallying. But I think we're going to see a correction soon, and then the rallying back. What I think will be very different, and I know many of your viewers are following this, is how commodities, real assets, gold, silver, etc., will behave in such an environment. For gold spot price, we all know it bottomed out 2 years ago, and it's up like 33% since then. I think 2018 will be a fantastic year for it, and therefore It's not going to be the best year to accumulate it, because obviously you want to accumulate as much gold as you can for the lowest price possible, because it's insurance basically. So on that front, I think the spot price is going to perform very well, and I think throughout 2018 it's probably going to push the $1,510 per ounce. I don't know if it's going to end the year that way. It might peak, midway through the year, August, except September, etc. But it will push that. Personally, I'm not going to buy any gold ounces because I have 5% of my portfolio already weighted in gold. But what I'm very underweighted in is the mining stocks or the mining shares, which I've avoided for a long time and even shorted, except for a few specific ones that I wanted to accumulate on the way down. But I think 2018 will be a fantastic year for those, because they're going to release a lot of data, which is called the preliminary economic assessment. Or basically, they're going to release data. A lot of mining companies are going to release data that shows that their projects are economical with the price of the underlying commodity as we speak. And therefore, a lot of companies are going to see their projects being advanced and probably merged and bought out by a major company. I'll give you an example, David. 3 weeks ago, like New Year's, I made a resolution to open a brokerage account in my daughter's name. She's 15 months old. And so my wife told me, you know what, if you're going to do that, I want you to find an investment vehicle that you can put a principal in there, let's say 20 grand. Put 20 grand in there, and then I want to sell only the profits. I want to take only the profits out every 2 to 3 years and leave that principal in there. Leave that 20 grand in there and just pay off a lot of the the living expenses that have to do with the baby through the profits. So basically what she was looking for is like a hybrid of two portfolios that are usually, you can't mix them up. So a lot of people, if they have short-term obligations, what they do is they do a private loan for like 8%, and then they know, the principal is safe because they make a loan for, let's say, 6 to 8 months, and they know in 6 to 8 months they have the principal and the interest. What my wife suggested is that we merge these two events, predictable time of getting your principal and profits, with the resource sector, because it's so cheap. So what I was looking for 3 weeks until today is a company that has a 2 to 3 year timeline with milestones along the way and a trajectory to be sold in 3 years. So that way I know for sure, or with a high degree of certainty, that in 3 years I will be able to bank profits because they sell at a premium, because today they're very undervalued. It took me 3 weeks to find such a company, and we can discuss it if you want. Because I made a special report for listeners of the show at wealthresearchgroup.com/merger, MERGER, and you can just hit that, hit there and download the thorough report. The company is called Callinex Mines, one of the world's best investors in terms of resource sector. A 40-year veteran, is a sizable shareholder. In fact, he's in the Guinness Book of Records because one of his previous companies hit the world's deepest rig or deepest drill hole in natural gas in the previous years. So he's a very successful person, and he's a big backer of this company as well. And we can talk about some of the key factors for it later on the show. I don't want to take too much time on this, but suffice to say, that's gonna be my daughter's first stock ever. So I'm very excited about that.
Very good, sir. So the website for that, and I'll put that link in the description below this video, wealthresearchgroup.com/merger. People need to click on that, check out that free report. All the reports that are on wealthresearchgroup.com are free. They do not charge for this information. All this research they do, I think people should click on that for sure. Wanted to talk about cryptocurrencies, hot topic. Now, there was a correction, a rather massive one, in cryptocurrencies recently, and then something of a fast recovery. What does this all mean for the cryptocurrency markets?
Well, three things, and I told this on Russia TV, on RT, the news channel. You obviously are aware of Russia Today. Mm-hmm. They lined me up for an interview last week during this huge slaughter, massacre for the cryptocurrencies, and they asked my opinion. I'll give you the same opinion that I gave them. When an entire sector goes down in a matter of hours by 50%, it shows you that it's in very early stages. A saturated market or a mature market cannot go down that much. It means that there's a lot of volatility, a lot of speculation, and a lot of malinvestment money in there, and that's why it happens with cryptocurrency. So if anything, this is a very bullish sign, because people have been saying, hey, the cryptocurrencies are up so much over the past 2 years, it's insane, etc. What can happen from here on out? And this just shows you it's very early stage. In fact, two of my partners just came back from the North American Bitcoin conference in Miami. 5,000 people attended, and it was an unbelievable event. There's so much brain power and so much human resources that are going into this sector. And I want to say this, David. Mm-hmm. The word cryptocurrencies gave this industry a false name. Most of these projects that are based on blockchain or similar technologies are not aiming to become currencies at all. They're not aiming to compete with our fiat currencies. There's only a few of them that are designed, programmed, and their development teams and community are aiming to become just a viable currency. The rest of these projects, and there are thousands of them, and thousands more will come, aim to solve problems in the financial sector, where it's whether it's the remittances or wire transfer or fees for sending money, or making a production chain more transparent, like the diamond supply chain or the food chain or your healthcare. And keeping records, voting, etc. So there are so many projects that have nothing to do with currencies. The best way to think about cryptocurrencies is to call them digital companies in startup tech phase and view them as such. And when they correct 50%, all of them, take that as an opportunity to go in and purchase or use or own the ones that you feel most confident about. And there's going to be a lot of things going on right now. In 2017, we covered a lot of the ones that are in the top 10, that ended up in the top 10 at Wealth Research Group. And our biggest winners were Ethereum, that went from $12 when we covered it to over 1,100. Dash, that went from 30 to over 1,100. And just 1 month ago, in December, we covered Ripple, 27 cents. It went up to about $3. And I just recently, beginning of January, I released our top 5 altcoins for 2018 at wealthresearchgroup.com/top 5, top in the number 5. But there were only 4 cryptos in there. And the 5th one we're going to release this Thursday. So the 25th, we're going to release that in the newsletter, obviously to only the subscribers. So I'm going to give it up in the air right now. But I believe that this particular coin has the potential to rival the top 3 where they're at right now. So it has a huge upside of about a 10 to 1 scenario where it can go up in the next year or two, 1,000% or higher. Now, obviously, a lot of altcoins are going to do 1,000% or higher in the next 2 years, but safely, when you want to make a safer return or a more high potential return and not dabble in tens of them, this, in my opinion, will be the top one to be involved with. And so, if you're not involved with cryptocurrencies, first of all, I suggest you get educated real quick about them, because in any way you look at it, even if you're an investor and even if you're just a person who lives in the Western world, you will get disturbed and disrupted by this change, by this revolution. So you need to know about it the same way that you know basics about electricity, about the internet, about everyday life. Blockchain technology and everything that has to do with it will be part of your life, and you need to get educated on it. So it's one of those goals that you must set for 2018. No matter what your technological knowledge is, you don't have to be a developer or a programmer to get involved in this. Just like I'm not a tech-savvy person, and I don't know how the internet works, but I know how I can utilize it, and I know how to judge and analyze value in businesses that can create shareholder wealth because I can see where demand is going. So I think this is something that's very important for anyone listening, no matter what your age or profession.
Absolutely. And I am looking forward to the release of the top #1 cryptocurrency on wealthresearchgroup.com. But for now, you can still go to wealthresearchgroup.com/top5. Get at least 4 out of the 5, and soon to be all 5 of the top cryptocurrencies recommended on wealthresearchgroup.com. That link is in the description of this video. So now I wanted to move on to a little bit of politics. What's going on right now with the political situation in Iran and North Korea? Possible war to occur? What do you think?
I think no. I think the possibility of war is extremely low, and I think they're playing a political game that is basically propaganda negotiations out in the public's eye. So they want to create a sense of fear. They want to create a sense of a situation where new solutions can come in, especially the North Korean ruler, because the idea for him is he wants to live the good life like he's living right now. He has control over a country. That's something that not many people have. And that is very intoxicating in terms of the wealth and the lifestyle that he has. He doesn't want to give that up, and he doesn't want, obviously, to get bombarded by the U.S. Government. What he does want is freedom. He wants more autonomy, and therefore he's playing this game of chess with President Trump and with other leaders under the table, obviously, to make sure that his government and his country stays clear of any and all U.S. Sanctions, etc., while he stays on top. So, but in the meantime, it does create a lot of friction in the world's financial system and in the world's political system. But I think the more important thing to view in terms of what's going on is how China and Russia will be reacting to a weakening U.S. dollar in 2018. So the U.S. dollar is at its worst year in 2017, and they're getting very frustrated with how the tax cuts are basically signaling to the market, hey, we're not going to have sufficient taxes going forward, the United States government, if we want to fund our infrastructure or anything else or any of the deficit spending. We need to issue more currency, and we need to issue more bonds. So basically, Trump has told the market that, hey, we have the reserve currency of the world. You need to keep buying it because you already own $3 trillion of it. And obviously, you're not going to start dumping it because it's going to be counterproductive to everyone. So he's basically telling them, you're locked in the same boat as I am. We're all in the same boat. And until there's a better solution, the U.S. dollar will stay the reserve currency of the world, and we're going to keep partying with debt. And so this is something that's very important for American listeners in particular. The U.S. dollar is going to go through another year of a bear market, and I think for the next 2 to 3 years, you will see higher inflation levels and lower U.S. dollar in comparison to other currencies, and that's going to push up commodity prices and it's going to make your life a little less easier, even if you've been suffering through this 8-year period of wealth disparity between the middle class and the wealthy already. This is going to be even worse. So unless wages pick up in the next year or so, the middle class is going to get more frustrated. And this is personally why I think that Trump will need to roll out an infrastructure plan, which will be the only way for companies and corporations to raise wages, because they're going to get all this disposable income from the tax cuts, and they will have a place to deploy it, which will be in real infrastructure programs for the United States government. So if what I think will happen, the U.S. dollar will weaken, commodities prices will head even higher. You see zinc already up 90% in 2 years. See copper prices up, iron ore prices up, silver is going to probably rally soon, and oil prices, they've doubled since their bottom at $30. So this is definitely the trend, and if the market keeps anticipating more inflation, it's going to start spending more. You already see the U.S. economy is working on a 3% savings rate, so that's extremely low. Now they got tax cuts, so people have about $1,200 to $1,500 of cash equivalent from this tax cuts, they're going to want to spend that again, and you multiply that to an entire nation like the United States, so 300 million people, or basically 200 million working people. That's a lot of money that's going to go into the economy again in 2018. So that's why I don't see the stock market peaking. That's why I see commodities joining the bull market party, and that's why I see inflation heading higher, bond yields heading higher, and Russia and China becoming more of more buyers of gold, because they just cannot handle what's going on in the U.S. It's a you can't live with them, and you can't live without it. The U.S. dollar at this point, because they've accumulated so much debt, and they depend on the U.S. And 20% of cars in China are sold from U.S. manufacturers. There's so much codependency. You cannot stop this game of moving chairs right now. So if you're an investor, you cannot rebel against the system. You must adapt to it, and the way you do that is by controlling where you allocate your funds, and knowing that if you are an employee, there's a great time to start initiating ideas in your workplace and become a more valuable employee, because we're reaching peak unemployment. So in other words, for companies to stay as profitable as they are with the fat margins that they are now getting, because this is the end of the cycle and their corporations are getting nice profits right now, they will need to lay off people to keep those margins up. So you need to make sure that your job or whatever you do is something that's indispensable, that you're working and toiling away in order to not get sacked when 6 to 12 months recession hits again in the U.S. and obviously in Europe and elsewhere.
Yeah. I did want to talk more about that topic, jobs, employment. I know that 40% of jobs in North America will be lost by 2030. That's pretty scary. I know I have a lot of younger viewers and listeners here on Looking at the Markets. What should millennials do about this scary job situation?
Well, so obviously 40% by 2030 is an estimate, but definitely you're going to see about 20 million jobs for sure getting wiped out, and meaning wiped out being either outsourced or autonomized, so replaced by robots or any other artificial intelligence, etc. A lot of jobs, basically all trucking jobs, cabs, etc. So anything that has to do with drivers is getting moved into this realm of driverless cars without a driver. You will see a lot of other manufacturing jobs getting replaced with robots. You're going to see a lot of jobs on Wall Street for trading getting replaced by algorithms and robots, because they don't have emotions and they trade better most of the time. So you're going to see that happening and occurring. And for millennials, what's very important to understand is this is a time of one of the largest shakeups in the employment industry that the world has seen since the Industrial Revolution. So if you remember, the Industrial Revolution started in England. They discovered that they have a lot of coal reserves, and that helped steam their boats, and they were able to become the global reserve currency and the global leader because they controlled the seas. And they started colonializing other nations because they had so much unemployment within their nation. They had to colonialize and start, getting millions of people moving to other countries and working over there and on behalf of the United Kingdom. That's something that we will see going forward in the U.S. You will see a lot of cities in the U.S. that will be left without any competitive advantage. They're going to have high taxes, with compares to low taxes or zero taxes with other states. So one particular state will see negative migration into another state will see positive migration. Texas will be a state that a lot of millennials will flock to. They will flock to all the states that have zero income tax, like Florida, North Dakota, Wyoming, and because people can work from their homes and have a home-based business, it's not going to be as important to go to your office. So in 10 to 20 years, you're going to see a much more spread out economy, where a lot of these states that people did not want to live in before, just because they didn't have any commuting to regular downtown jobs, people are going to move there because they have the quality of life, more nature, pleasant weather, and you're going to have your job working from your home. It can be for a big corporation, it can be for a small business, but you will have the ability to be a freelancer for a lot of these major corporations that are starting to move into smaller units. So keep in mind on keep an eye on this. And also, David, China is starting to become a more mature economy. Their middle class is getting much richer, and therefore their cost production is getting much more expensive. So there are 45 countries right now that produce goods cheaper than China. So China is going to become a consumer economy, much like the U.S. is right now. That's going to create a lot of new jobs for. Excuse my voice. I was probably yelling too much when crypto's tanked. So, by the way, in the U.S., you're going to see a lot more jobs to cater to the growing middle class in China. So you're going to see a lot of businesses in the U.S. that are designed to cater to the needs of Indonesians and Singaporeans and Chinese and a lot of the younger demographics in India that are getting richer and will want to participate in the stock market and in the real estate business, etc. And U.S. Citizens and millennials, etc. will be part of this growth. So you will see a move from east to west, but I do see a lot of people in America that have a lot of entrepreneurship spirit, working and toiling away to be part of this growth. So definitely, because we're becoming a global world, your specific location doesn't matter as much as what you can contribute to your customer. Excuse me.
Got it. Now, I know off the air, you told me there would be a huge change in retirement, moving from millennials to retirees. You basically told me that retirement is over. What does that mean exactly?
Well, see, for since 1934, when the United States government started all of these Social Security plans and the 401k started in the 70s, etc., it's all based on lifespans, how much people can have to live. And so people have lived until they're 65 or roughly 65 for decades now, but now it's starting to grow. So people live until 75, 85, 95. People are living 100 years old and older. There are about 500,000 people in the U.S. right now that are over 100 years old. And so you're going to see this. I'm sorry, there's 100,000 people that are over 100 years old, and by 2030 there's going to be half a million, with 500,000 of them. This is a fast-growing segment of the population, and you cannot pay a person 45 years or 35 years of entitlements. That's just not possible. So what Kentucky just did is they basically passed a law where you need to keep working if you want to get your Medicaid. So you need to show them a stamp. A lot of other states will follow suit. I think the age of retirement will start getting postponed by other politicians to 67, 69, 71, etc. We might see it go all the way up as 72, 73. I think this process will also happen in Europe. And I think that millennials cannot count on the current social system where you funnel money to Social Security and expect to get it out when they reach retirement age. All millennials and people that are in peak earning years right now should think about how they create their own nest egg and their own ability to have cash flow from assets, from cash flowing assets, and not depend on government subsidies when they get older. The United States government is getting to a point where they need to make tough decisions, and they've been able to avoid this because they can print money. They can print currency units and keep it more or less stable. Obviously, in 100 years, to lose 97% of the purchasing power is insane. But for most U.S. citizens, they feel throughout their lifetimes a 20 to 25% inflation and not or 30% at the most, and they didn't feel this entire 97% inflation. So this is not like in other countries where they experience huge problems with their currency. Most Americans are trusting of their currency, and that is a huge paradigm that's going to be shifted once the U.S. starts losing its reserve role. So if you have 20, 15 years to retirement, start thinking about how you're diversifying, going into assets, cash flowing assets. And if you don't have enough money to create an asset class that will sustain a retirement, think of how you can increase your paycheck at your work, or how you can get into secondary and third income streams using side businesses and part-time businesses, either online, home-based, or just another way to consult in whatever you do. If you're an expert in what you do, just consult freelance-wise. That is something that's going to be very, very popular going forward. You're going to see a lot of people having their main career and then another second and third options that they're doing for part-time work.
I like the idea of also diversifying one's investments as another stream of income. I'm a big fan of the commodities space. But speaking of that, right now on the political scene, there's China's massive push to stop local miners driving up commodities prices. So what are the implications of that?
Well, their pollution levels are getting to a point where their mortality levels and health-related issues are costing the healthcare system more than the benefit they get from having a vibrant mining economy. So they're starting to import a lot of the commodities, whereas until now they were exporting commodities. So if you're looking at what this means to the world, China is going to be the biggest consumer of commodities going forward. And if they consume so much industrial metals, but they're not, they're clamoring down in terms of regulations and how much pollution you can do and environmental cost. Mining companies are going to choose not to go in to China, and they're going to choose mining-friendly regions. With that said, there's a lot of problems finding high quality and high grade ores, and so commodities have been put away for 7 years in a very rough bear market, and that bear market is like a snowball effect. So not only have commodity prices been down, exploration budgets have been down. So companies have not found a lot of commodities, and now you see all three major economies, Europe, U.S., and China, moving together upwards. There's going to be a lot of demand for raw materials, especially if you're talking about China. Their car industry is already the largest in the world, but it's going to get a lot wider, a lot larger because of their middle class. All of these things need iron, and they need copper, and they need a lot of zinc for the coating. And zinc, for example, you've not found any significant ore bodies in 25 years. And so the London's Metal Exchange has 1 week of stockpiles left. No other metal on Earth is in such an acute shortage. That's why Calnex Mines, the company that I mentioned before in the interview, they have a resource. They have a minerable asset, and they're looking to create a mine out of it in the next 2-3 years. And that's why I'm going in on making a purchase on that company, because their asset, the Natch Creek, is right close to the Hudson Bay mine and smelter, which is going to be depleted fully in 3 years. And so Hudson Bay is going to want potentially to buy Calnex, because they already have the smelter right there, and Calnex has the zinc to keep Hudson producing. And obviously, with the price up 90%, it's a great time to be involved in the zinc sector. So I was like, again, just to make sure, because people a lot of times they email me after the interview, hey, we didn't get that link or whatever.
Right.
wealthresearchgroup.com/merger, MERGER, and that's just a thorough review of the entire operation for Calnex Mines. I just got off the phone with Mr. Carlos Civelli, who is their chairman of the advisory board, and he believes that the company will potentially be bought out for about 5 to 7 times the current market cap in about 2-3 years. And of course, he's a 40-year veteran, and he's in the World Guinness Book for previous achievements in the natural gas industry. And the CEO, Max Forfield, about my age, 35, He's going to be one of the people you want to follow for the next 20, 30 years. This person is one of the most contrarian investors in the sector, and I have nothing but respect for the management team over there. And obviously, off the air, I told you this, David, but their chief geologist, Mike, is 80 years old, one of the most accomplished geologists in the world. 12 discoveries that became a mine. That can be said about less than 5 geologists on this planet. So wow. You got a Hall of Famer in Canada in the mining industry, and this company is trading right now for about 20 million Canadian, and it's quite a remarkable opportunity in my opinion.
Absolutely. And again, for people who want to get the research on this, they should check the link. Click on that link below the description of this video, which is wealthresearchgroup.com/merger. If you want to learn more about all that information, all that research you've done in that niche, as well as about Callinex mines. And by the way, if they want to invest, and we're not telling people what to buy or what to sell, they have to do their own research. But if they are interested as an investor in Callinex mines on the stock exchange in Canada, that's ticker symbol CNX. And in the United States, that is ticker symbol CLLXF. And that information will be right on your screen right now, as well as in the description of the video. Also, wealthresearchgroup.com/top 5. Pretty soon, they'll be putting out the #1 cryptocurrency. They already have 4 out of 5 right there that people can invest in if they choose to. But pretty soon, I know that, in a few days, right? You'll be revealing the #1 cryptocurrency. Is that correct?
Yeah, on the 25th. And out of those top 4, EOS was up 80% since January 5th when we released it until the day that the crypto smashed. And this is something that if I may just for 2 seconds give people another way to look at cryptocurrencies. I have 2 portfolios in cryptocurrencies. One is a long-term, and one is short-term trading. For the short-term trading, I get into positions where it's a few days or a week or 2. If I see a lot of volatility on the way down, then I get into the ones that I think are the strongest. And if I see that a lot of bloggers online are talking about developments within a specific cryptocurrency, that is a sign that there's going to be a lot of speculative money in there, and you want to get ahead of this. So you'd want to have, I personally have another person looking at all the YouTube bloggers that have a lot of a push, and that's how I get into positions early with the short-term one. With the long-term one, we look at ways to get involved with projects that will have a meaningful change within the next 3, 4, 5 months. That's how I divert these 2 portfolios.
Absolutely. And once again, all of the research, all of the reports on wealthresearchgroup.com are free. They do not charge for this information, and they do plenty of due diligence, plenty of research, and you can benefit from that. So head on over there, and that link is in the description of the video, below the video, as well as on your screen right now. Mr. Lior Gantz, I always learn so much from these discussions we have. Did I miss anything, or were there any topics that I missed today?
No, David. Thank you very much for giving me the platform and inviting me over. This is my passion, what I love to do, and I just love getting a lot of emails from people that have benefited from my investment research. I've been investing for 18 years now, and for the most part of my career, I held onto my chips close to my heart. And 2 years ago, I decided to change the way that I research and start to publish information with Wealth Research Group. And I'm very excited that so many people have emailed us about spectacular gains that they made in cannabis, in the cannabis sector, in the cryptocurrency sector, in the resource sector, but also in high yield stocks for retirement that we feature on wealthresearchgroup.com, or the dividend raisers that I talk about a lot. Just in general, stuff that I've learned over the years, experience that I've had, and I travel to about 12, 13 countries a year. I see a lot of things, and I just love sharing this with people.
Excellent. And by the way, if people do want to learn more about Callinex mines, they also have a website. That's Callinex.
Oh, yeah.
.ca, CALLINEX.ca. I'll put that in the description of the video as well. And once again, their ticker symbols in Canada are CNX, in the United States, CLLXF, for any potential investors in that. Check out all the research reports on wealthresearchgroup.com. wealthresearchgroup.com/merger is what I'm looking at right now, and you should be looking at too. Mr. Lior Gantz, I hope you'll continue to be a frequent guest here on Looking at the Markets. Thank you for joining me today. I really appreciate it.
Thank you.